right, welcome everybody to another Eye Opener, this Market Wealth Daily's quick little video chats that we do with top traders. We got Keith Harwood here. We got you back, Keith, because you have been just nailing it, man.
Thank
Really,
you.
the last couple of weeks, you have been super helpful at getting us to spot some things that we probably would have missed if it wasn't for you pointing them out to us. And last time we were together, we talked a little bit about one of the tools that you're using. And I'm interested to see because this is a little bit of a different market. We saw this, news-driven rally yesterday where the market kind of jumps up. And those kind of things to me, from what I've seen in the past, can kind of throw technicals into a little bit of a spin. So really interested to see how the stuff that you've built will kind of interpret this and what it's going to kick out in terms of a potential opportunity there. I know that it's worked great the last couple of weeks, so glad to have you here. Anyway, I'll stop
Yeah,
talking. I'm going to hand it over to you, and you know, let you give us the important information. So thanks for being here, Keith.
absolutely. Let me share my screen here. We
And
can
welcome
see.
everybody too. While Keith's pulling that up, I just want to remind you all, if you have questions or anything, definitely chime in and shoot us over a question or two. We'd love to hear from you guys. Hey, Carlo, great to see you out there, man. I'm a big fan of you. I hope you're enjoying all the stuff that we're doing. So thanks for being here again, buddy.
Yeah.
All right, what are we looking at, Keith?
Well, I mean, I think that broadly speaking, we're looking at the market. It had a really nice positive response to this, you know, delay or helping situation, I guess, with the U.S. and China and tariffs. So, they got a 90-day cutback slash in the tariff situation. Looks like they're going to try to negotiate. It's a bit of a change of the talking point that we're going to just keep going full bore and tariff the heck out of each other until somebody quits. So market liked it. Market recovered nicely. Market responded well to it. And we're now for the S&P 500. SPY pushed through the 200-day moving average, through the 100-day moving average, like right back into that broad bullish territory above all of these key recent levels, back above the March 25th high. Everything looks rosy, apparently. We'll see if that shifts over the course of the next few weeks or a few months. But, for now, the response is clearly bullish, and we've got a tailwind to the market as a result. And, stocks like what we talked about last week in JP Morgan, they had a
Yeah,
very
that was a
nice rally yesterday. It was up a little bit during the week from, the Tuesday morning call when we were talking. It was trading around 250 on the open. By Friday, it was trading around 253. So, still nice, up about a 1.5%. But Monday was clearly the big catalyst day after the weekend news. I will say for like the options we were looking at, which was the June 250 calls, when I pull these up here, we'll come back to JP Morgan. Little sneak preview there for you guys. The June 250s on the open on Tuesday were trading for sorry, it was the 255s. See, that's why I double check this stuff. The 255s, they opened around 7.25, 720. On their peak yesterday, trading around, $11. So call it about 40-50%. That's a pretty good solid return, even through Friday. Up a little bit here, about 10%, but then the real big kick was on Monday, of course. That's the power of that weekend holding period when you've got stuff that's going well. And
right.
that's something that we incorporate into that paid system. So when things are going well into the end of the week, we like to hold for the weekend, and JP Morgan certainly fit the bill for that. So it was a very nice market return for JP Morgan. Almost anything that you held over the weekend was good. I will say there were certain things that were not good. For example, Philip Morris, which has been a great stock historically and recently throughout all of this, people got out of that. So that flight to
Mhm.
safety that was happening before in those safe haven stocks, people started getting rid of those as soon as we started working on more risk taking. And so there's a risk appetite out there right now that is certainly valuable to understand and know. We can't just buy everything because certain stocks perform better when people are looking for safety. Certain stocks perform better when we're looking for risk. Right now, the market's looking for risk, growth. We knew that the tech market had gotten hit hard on the tariff news. So what naturally happens is tariffs being reduced allows tech to go back into more of a leadership role, and it was performing slightly better than the broad market. And generally speaking, I think this market looks like it's got very little headwind right now. So yes, a lot of this has been priced in, but the fact that we don't have that I can see right now a big fundamental input that's going to completely stop this and turn it back around is crucial. So we're starting to get back into calmer waters. And actually the market, since I'm an options guy, is pricing that in with the VIX. So the VIX is back below 20%, closed around 18%. These are the levels that we were seeing back when we saw the March highs, March 25th highs. The VIX was around 17. When we were just kind of chopping around at the beginning of the year, it was around 15. If I go back longer, we're talking about a VIX that during a normal, generally bullish market goes down towards 13, 14. So it does have some downside, but this recency of this event does often prevent it from just dropping all the way down to those levels. So we may be near a short-term low in the VIX, but a low VIX does give great leverage and defined risk. So it means the options are cheaper so that I can get the leverage if the move continues, the defined risk if it reverses, and I can do it for a lower entry point. So I'm excited about this sort of market setup. This really tends to fit well with long option systems, especially when we've got more predictable inputs. So artificial intelligence, just for what it's worth, the tendency is to look for stocks that are trading based upon technical and data information rather than unknown fundamental inputs. Those unknown fundamental inputs can often throw a wrench into the trend. The data that we're importing into our artificial intelligence system is the general stuff that we're looking at from a technical side, right? We know the previous day's range, we know how it's been moving, how the volume has been going into the market, and how things tend to look, and factor in the idea that announcements like earnings may cause an adverse move because things don't always just go up. I mean, a prime example of that was actually last week in Palantir. Palantir has been on a bull tear, and then the earnings disappointed last week. So we had a big drop on Tuesday. Now, of course, Palantir is still going up broadly, but having exposure through that earnings period caused the long, particularly if anybody was long like the 140 calls, that caused some pain. Now, after the dip and it starts to recover, it looks great. But enough about Palantir. I'd rather give you guys something that I'm looking at right now. And one of the names that popped up on some of our AI screeners was Delta Airlines. Now, for those that had been looking at Delta in the past, this had been on a great run and just holding up near the highs throughout the beginning of the year. If I go out for the last year, you can just see this nice trend from August up through November. So when the market's in bullish mode, people are looking at some of these travel stocks, Delta, United. They go back to the cruise liners, Royal Caribbean. They look at Expedia. A vacation starts to become a thing again, right? And we're going into the summer months too, which should be a good time for airlines. So broadly, I look at Delta. It flagged for my AI. I go back to that stock forecast toolbox that I mentioned before, and I look at like the S&P 500. It's predicting more sideways behavior in spite of the bullish behavior yesterday. So, if the market's looking at consolidating, then I got to go for my stock picking elements. And that comes up from these AI screeners. And when I pull up Delta Airlines in particular, it just looks like a potential rock star for the next couple of weeks. Based upon the formation, based upon the information we're seeing, we're predicting from the AI this really nice bull run for the next week or two. I mean, we're talking about it may be over optimistic, but prices back in the 70s within the next 10 days, that's an insane move of 40% in the stock. Now, if that actually happens, this is the grand slam trade. I'm not looking for it to nearly achieve the full return there of 40% in 2 weeks. What I want to focus on is, okay, well, if this starts to go that right direction this morning, continues with its bullish bias, and starts to recover back towards levels that were seen back, just a couple months ago, pre-tariffs, we're still looking at potential for 60 or higher. So I got AI flagging it as one of the best looking opportunities. I got my forecast toolbox telling me it looks like one of the best opportunities. And with the VIX lower, leverage is cheap. So, that kind of final step from the option side of things, yeah, okay, it's up 23 cents today, a drop in the bucket relative to the potential. But even if I go out to the June 52 and a half calls, they're $2.15 right now. If we
Hmm.
go to 60, it's worth at least 7.5. If we go to 70, like the model predicted over the next 2 weeks, these are worth 17 and a half. So this is one of those potential home run mega return trades. And if we just have a little bit of bullish behavior, we're good. Should have some nice grind out, ho hum 30, 40% potential return. If the market reverses, it's a fairly cheap entry point at $2.15, plus or minus. It's got great defined risk. And there's not too much theta. So for those that are not familiar with options, they decay a little bit every day as you get closer and closer to expiration. By going out to an option that expires in just over a month, that theta impact is a lot less. Where that theta really tends to hit is in the last week or two of the options expiration. So, the next week, May 23rd, 52 calls, those could get decayed a lot if the stock doesn't rally. But if the stock does rally after this nice 5% drop in the implied volatility, I've got a really cheap entry point. So, this is the sort of stuff that I'm looking at every day, obviously. We talk about it in like our live trading room and going through the AI stuff, going through the forecast toolbox. This is actually not going to be a paid trade this week because I wanted to highlight something that we do from the forecast toolbox. And if you guys want to talk about the paid trades, obviously feel free to reach out to me. But this is one that I thought was highlighted as a particularly exciting opportunity from more of our trading room and our forecast toolbox for conversation point here, given the potential upside here. I mean, it just looks like this is one of the best setups I've seen on the forecast toolbox in the stock in a long time. And so that gets me really excited given, the historical performance of our AI.
Right. And you just covered so many points. Again, I think we had this happen last time too. You get going and
Yeah.
you're talking about the overall market, you're talking about volatility, then you're zeroing in on a potential candidate. And I'm like, and my brain can't keep up sometimes. So I just want to go back and do a quick recap. First
Yeah.
off, one of the things that you pointed out that I thought was absolutely critical is that when volatility starts to come down, what you have happen is since it is a factor in the pricing of options, the prices of options come down. Now,
Hmm.
if you see a big move on something after all the prices, it's not like a premium, and I say premium in the kind of like everything's baked in, volatility's pushed the kind of general prices of options higher. You're in a bargain climate. When that volatility starts to come down, you can find things. Now, the trick there is to find the cheap options that are going to break out. And I almost
Hmm.
interrupted you to say that, and you just basically went right into it. And you're like, oh, hey, let me just show you one that is, with this kind of drop in volatility, you're bringing that option price down where it gets pretty affordable. And you get a contract that's, in a pretty accessible price range for almost anybody trading, and you buy just a simple call option and you get a big bang for your buck with that. But then, you go on and again, and you're talking about, Delta. Here's Delta, and this was another. Oh yeah, it's like with everything in the news lately, I wasn't thinking about airline stocks. I wasn't thinking about
Hmm.
travel stocks at all. It wasn't popping up on my radar. That's not where the news is driving us right now. And so many times, we have these big news events. And over the past, I don't know, 6 months or whatever, I mean, the news has been just like a brain magnet. It sucks your intelligence right to wherever it's deciding it wants you to pay attention to. And don't look over here on the side because there's some really great things, but we're not going to talk about that. Great things like, potentially Delta setting up for a big move. If you're getting sucked into only the headlines, and I'm not saying whether the headlines are right or wrong, but
Right.
it's a very narrow focus. And what happens is you miss these hidden trades. And your stuff is great at like taking up the haystack to find the needle, it finds it in there, it's buried, and you're finding it. And this is just another great example of it. Using the
Yeah.
forecast tool is amazing. And to see, something that's Improving. Now, we're talking about the last couple of weeks, seeing some great performance out of the tools that you're using. Again, having this high level of confidence that this is a potential big breakout. The thing I would add to this is when you look at these types of plays, go back to the basic rules, everybody. Don't forget, you got to be smart about this. You got to be wise about this. Uh, you always want to make sure you look at your allocation of what you're putting into that trade and you're doing it on your terms. You trade for
Mhm.
yourself. You can't trade for anybody else, just because we're saying this looks like a great thing, don't forget to go back and do your homework. Look at your account and figure it out. Don't just think, oh man, I'm going to bet the farm on this. If you do and you win, great, love it. But you got to be smart. You got to be able to say,
Yeah.
hey, stuff like this may work and it may not.
Yeah.
Everything that we've seen, we have a great track record showing that it's going to work. Just be smart about it. So put an appropriate allocation on the position that you take in this. But man, this lining up to be a big winner. I'm
Yeah.
really stoked to follow it.
Yeah, and I think one of the things that you keyed in on is one of the reasons that I really like Delta. Well, many reasons I like it, but what you had just said about the risk versus the reward, the risk reward profile is very skewed to the potential for the reward. So I don't have to buy my entire account worth of Delta Airlines account of calls, and I never would, frankly, because then I'm risking my entire account on Delta, not just um, being a little bit up. I need it to go up and pretty significantly in order to make a nice, like a real big return. And I'm, handcuffing myself from any other positions and everything else. The other thing that was key here for me was I wanted to note this Vega component that I can calculate here from some of the tools that I use. This is live vol. With implied volatility down 5% yesterday, effectively these options got 35 cents cheaper, so about 15% cheaper. So I'm getting this option on sale during a time when my model is predicting a potential really good return. And something where, if my target is to try to make, let's say it's $200. I think there's a decent probability right now that this could be a stock that gives me a double on these options, and I can risk $200 to potentially make $200, but I'm not expecting to lose $200 unless this stock absolutely tanks. If it goes down to $45 a share in the next week, these options might be worth 35 or 40 cents. I'm going to lose most of it. But if it goes down to 50 in the next week, down about $1, I don't get hurt too bad in that scenario. And I just have to make sure I set my stop parameters appropriately, where I'm not necessarily risking that full $200 per contract. I'm risking a portion of that in order to attempt to achieve that really outsized return profile. So, we'll see how this one plays out over the course of the week. Obviously, we're trying to predict the future based upon historical inputs, which is not always easy to do, but that's the power of AI, is it does a really good job of finding those trends. And the fact that people use it for their trading means that there should be other AI systems out there that are starting to look for things like Delta Airlines, and that may provide the tailwind that we're looking for.
Yeah, and don't sell yourself short there, Keith. The reason that a lot of the technology that you put together works as well as it does is based on what you tell it to do, garbage in, garbage
Mhm.
out, right? So if you tell AI, if you give it bad parameters and expect
Yeah.
it just to, fix all your bad mistakes, I don't think it works that way. It's going to take bad
No.
and make it worse. What happens is when you have a good program like you've had for years, based on your experience as a market maker and just being in the trading space for a long time, then you use that to build we're going to call it a machine that just kind of goes out there. It's not just grabbing trades. The machine part is doing the analysis, right? So,
Yeah.
I mean, you've done a great job in the past of pulling together these your outlier watch list and things like that you provide to some of the people who sign up for your programs, and nailing down these stocks. Now all of a sudden you've got this massive horsepower that you can plug those parameters into, and it can do infinitely more analysis to find more opportunities, and then you can add even more functions to that analysis to make it better.
Mhm.
Just mind blowing. And for me, this is let's say in the last year or so, you really kind of hitched your cart to this horse using this AI
Mhm.
machine, and I've seen just a phenomenal return on your investment of your time and effort in building all this stuff. It's really been impressive. You
No,
know,
absolutely.
yeah. So
Yeah, I mean, there's only so much that a human can do. You know, if I think of this in terms of getting like Excel spreadsheets,
right.
going through the calculator methodology on, or even just the mental math side of things and writing it down on a pen and paper, yeah, sure, you can solve a lot of problems along the way. But when I've got something that's more powerful, it can look at a universe of 5,000 stocks in the amount of time that I might be able to look for through a universe of 10 or 15 manually, or other screeners that I use. Maybe I could look through 100. I can do
Mhm.
thousands now. So I got to leverage that power and say, wow, there are opportunities I would have missed without AI, or
Mhm.
maybe I would have caught them without the AI. But I'm looking at a much smaller universe of trading opportunity when I'm doing stuff manually or just with other technologies. And so this is the key for me, is saying I have so much more opportunity now by leveraging the power of these trend following systems, these AI systems, to do the math, and then I do the due diligence and I look at the options analysis and I look at all the other stuff and say, yes, I agree with this one, and now I'm ready. And Delta can be a scary one because a lot of people might think I'm chasing here. We're above these highs. It's had a great run over 3 days. I don't want to go in that. But then when I
Mhm.
start pairing it with options and defining my risk, now I'm a lot more calm and confident and say, okay, well, it's worth the opportunity because the expected value is so high on the return. And I know I can define my risk versus just buying it and hoping it doesn't drop back down to 40 bucks a share near the lows of just 2 weeks ago.
Yeah. Yeah. And again, I'll just keep repeating this over and over again. You can't forget your basic rules of trading. You got to stick with them. Even when you find something that's super exciting like this, don't get punch drunk, and
Mhm.
forget that, follow your rules, have a trading system, have the rules. In fact, for the folks that have been tuning into these eye openers, we've been doing them more frequently. We've been inviting people into the room. So thank you all for being here. Um, you know, uh, Great to see some comments in there. Yeah, Carlo, thanks again, man. It's great having you there. I have actually, they took the leash off me tomorrow. I am going to be in an eye opener by myself. So I'm really stoked. But the thing I'm going to focus on are those trading rules. So I'm going to talk about
Yeah,
three things that people can do to make their trading even much more effective. Really kind of crank up the horsepower. I'll give you a little bit of a spoiler alert here. It's probably not going to be a big surprise, but the simplicity of some of these things is what is a surprise, So definitely hope folks will tune in tomorrow and join me, and I'll try to make it worthwhile. My claim to fame is that I've been around so many great traders for so many years. We noticed a lot of patterns in what the great ones do. Folks like yourself, and I can see those consistent patterns in their trading process and their rules and their approaches, and that's what I tend to gravitate to in my personal experience. So, I'm going to be sharing that with the audience tomorrow. But great. Well, Keith, we are going to be keeping
absolutely.
an eye on Delta because I feel like you just let us hitch a ride on a rocket ship here.
I
I'm
hope
gonna
so. But
I'm gonna buckle up.
if I have two winners in a row, the odds don't shift that the next one's going to be a winner versus a loser. But there are times where losses happen, and as long as you size the trades right, like you said, everything works out well in the long run, and hopefully, Delta just takes off, pun intended, to fulfill that expected value and actually give that potential return that the model is giving me. So I'm excited by it. So
Awesome. Well, we are what we're gonna do is we're gonna try to get you back again next week if we can, and we're gonna go through this again and see how it did, and talk about what's going on and look for the next one. But
absolutely.
uh thank you so much for your time today, man. I appreciate you jumping on these with us. I appreciate you sharing your knowledge and experience with everybody because that's what this is about. And you know, uh, we'll have you back again. I'm going to be keeping people updated on this. If you're not on our Telegram channel, I encourage you to do that. That's a really quick, easy way to keep up with this stuff and see what's going on throughout the week until the next time we get Keith back here.
Thanks again.
So, yeah, Keith, thank you. And everybody have a great day trading, and we will talk to you soon.